Good evening, everyone. Welcome to the channel. Today I am going to talk about Gtht interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Gtht Securities Co., Limited offers a diverse range of services across various sectors. Some of the key businesses and services provided by the company include wealth management, investment banking, institutional and trading services, investment management, securities and futures, brokerage, financial products, investment advisory, stock pledging, and margin financing, research and institutional brokerage services, trading and investment services, equity investment services, asset and fund management brokerage, corporate financing, loans and financing, market making, and investment services, real estate and property management, warehousing, investment and corporate management, consulting, venture capital investment and management, industrial investment, administrative management, foreign exchange dealing, securities trading activities. The stock price of Gtht Therapeutics, GTHX, has skyrocketed by over 113.57% in the past year, reaching a 52-week high of $7.12. The significant growth can be attributed to several key developments. Pharmacosmos' acquisition of Gtht Therapeutics for approximately $405 million provided a substantial premium and enhanced commercial reach for COSELA, a FDA-approved drug used to reduce chemotherapy-induced myelosuppression in patients with extensive-stage small cell lung cancer. Strong sales growth for COSELA, positive analyst ratings, and price target revisions have also contributed to the surge. Additionally, Gtht Therapeutics secured a strategic licensing deal with Pepper Bio that could generate up to $135 million in payments, and made progress in its cancer treatment pipeline, particularly in extensive-stage small cell lung cancer. The inclusion of GTHX in Russell indexes has further boosted investor confidence. These developments have collectively driven the stock price increase. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. 1. Wealth management business, which grew by 105.18%. 2. Increase in affluent customers and high net worth customers. 3. Expansion of market coverage and refining service solutions for client segments. 4. Rapid growth in QFI and broker settlement businesses. 5. Significant rise in revenue from overseas wealth management business. Revenue decline drivers. 1. Year-on-year decrease of 19.6% in offering size of new mutual funds. 2. Decrease in advance fee and commission income. 3. Decline in asset management business revenue. Net income and profit margins. A surge in growth. The first half of 2025 saw a significant surge in net income, increasing by a staggering 213.74%. This substantial growth can be attributed to the company's strong performance in various sectors, including technology finance and green finance. The expansion of equity investments and underwriting of science and technology innovation bonds also contributed to this increase. Furthermore, profit margins are implied to be rising due to significant revenue growth and net income growth. This upward trend is driven by the company's enhanced green finance service capabilities and increased carbon trading volume. Additionally, its industry-leading position in terms of scale and number of science and technology innovation bonds underwritten has also played a crucial role. The company's diversified business approach, including inclusive finance with over 700 new clients, and strong performance in pension finance with RMB 700 billion in total pension business management scale, have all contributed to this remarkable growth. As the company continues to expand its services and capabilities, it is likely that net income and profit margins will continue to rise. The company's financial performance indicates a significant issue with its ability to generate positive operating cash flow. The data from multiple pages confirms this trend, with net cash used in operating activities totaling -12,682,368 RMB 0 on page 12, and consistent figures on page 179. Furthermore, the company's own documentation on page 232 explicitly states that its operating cash flow status is negative. This suggests a persistent problem for the company in generating sufficient cash from its operations to meet its financial obligations. The company's debt level and interest expenses have undergone significant changes over the past period. Debt level. The company's total borrowings and debt financing have increased by 109.5% to RMB 398.181 billion, while its non-current liabilities have risen by 89.78% to RMB 116,379,784. The total debt level has also seen a substantial increase of 48.4%, reaching RMB 4,494,899. Interest expenses. Despite some inconsistencies in reporting, interest expenses have increased significantly, with a notable rise of plus 219.4%. This is further supported by the fact that interest expenses have increased from RMB 6,373,498 to RMB 9,422,351, indicating a substantial increase in the company's debt servicing costs. Overall, these changes suggest that the company has taken on more debt and is now facing higher interest expenses as a result. The company's financial performance was mixed across various segments and regions. The wealth management, investment banking, institutional and trading, and investment management businesses all performed well. In contrast, the finance lease business maintained stability but lacked specific performance metrics. Overseas subsidiaries also had no notable performance metrics mentioned. However, one region that stood out as performing well was the PRC securities industry. The company is confident in maintaining its leading position in the industry, driven by a strong and diversified business model with multiple revenue streams. Financial performance has been impressive, with significant increases in revenue and profit in the first half of 2025. To propel further growth, the company will advance strategic investment initiatives, strengthen support for science and technology innovation enterprises, and reinforce post-investment empowerment. The company's strategy also includes expanding its alternative investment business through strategic investments, obtaining funds from placements and repurchase agreements, and supporting national strategies such as financial power and educational power. Additionally, the company will continue to excel in various areas including technology finance, green finance, inclusive finance, pension finance, and digital finance. By advancing its digital transformation strategy, focusing on online business processes, data-driven operations, and intelligent management decisions, the company aims to maintain its industry-leading position while driving sustainable growth. The company has a history of paying dividends and buying back shares. Dividend payments have been confirmed on multiple pages, with the total amount paid out in 2024 being RMB 3,561,492, and in 2025 being RMB 4,906,136. Additionally, share buybacks have also taken place, with a total cost of RMB 0.211 billion from April to July 2025. These transactions demonstrate the company's commitment to returning value to its shareholders through both dividend payments and share repurchases. That concludes the financial summary for Gtht. Feel free to comment below, and I will be happy to answer them when possible.